In just 48 hours, traders bet $2 billion on one outcome, more money than flows through some entire stock markets in a year, all because of Trump news. This happened on prediction markets like Polymarket, where ordinary people with no Wall Street credentials are pricing uncertainty in real time with their own cash. For context, that's roughly the annual operating budget of a major United States city, wagered in 2 days. What makes this stunning isn't just the volume, it's who's doing the betting. These aren't hedge funds with armies of analysts. They're everyday traders, professional quants, and increasingly AI-backed prediction models competing against each other to forecast what comes next faster and more accurately than anyone else. The volume spike reveals something profound about how capital actually moves in 2026. Instead of waiting for CNN to call an election or for Wall Street to publish quarterly research, millions of people are literally voting with money right now, placing real capital on the line based on their conviction about the future. Think of prediction markets like a live transparency machine. Every dollar is a vote saying, "I believe this outcome." When billions flood in within 48 hours, you're watching collective confidence update in real time. And here's the part that changes everything. These increasingly sophisticated prediction markets run on AI models. That's the actual story. Prediction markets have existed for decades, but what's different right now is the technology behind them and who's participating. Historically, these were niche academic experiments or small communities of serious bettors. But in 2026, platforms like Polymarket have exploded because they're now accessible to anyone with a smartphone and a Coinbase account. The key unlock was blockchain technology and cryptocurrency. It removed the need for a central authority to hold the money or verify the bets. Instead, smart contracts handle everything automatically. This change democratized forecasting. You no longer need permission from a bank or a hedge fund to participate. You don't need a financial license or sophisticated connections. You just need conviction and capital. What's even more interesting is that prediction markets function as real-time truth machines. When you look at the odds on Polymarket for different outcomes, you're looking at the collective belief of thousands of traders who are putting their own money where their mouth is. Unlike traditional polls that ask, "What do you think?" prediction markets ask, "What do you believe enough to stake real money on?" Those are fundamentally different questions. The answer to the second question is more honest. And increasingly, these markets are attracting AI researchers and builders who see prediction markets as a test bed for their forecasting models. That's why this week's volume matters. It signals that sophisticated capital is treating these markets as serious infrastructure. Here's how prediction markets work under the hood. Let's say someone creates a market asking, "Will Trump be United States president in 2026? The market starts with some initial odds, say 60%. If you think it's more likely than 60%, you buy YES shares. If you think it's less likely, you buy no shares. The more people buy YES, the odds change higher. The more buy no, they change lower. The price converges toward equilibrium, the point where supply and demand balance. What emerges is a collective forecast. In theory, this works because it incentivizes honest belief. If you're wrong, you lose money. If you're right, you profit. There's no abstract benefit to lying. Your wallet forces honesty. The fascinating part is how fast these prices update. When new information hits, say, a breaking news story about a political development, the odds change within seconds. Hundreds of traders simultaneously digest the news and reposition their bets. The price discovery happens faster than any expert panel could possibly analyze the information. This is why AI models love prediction markets. A machine learning system can consume news, economic data, polling, social media sentiment, and thousands of other signals, then instantly bid on the market to reflect its forecast. Over time, the models that make better predictions accumulate more capital and more influence in the market. The result is a strange form of artificial intelligence evolution happening in real time. Let's zoom into specific bets happening right now. On Polymarket, traders are currently pricing Trump's political future at around 70%. That's a massive swing from 6 months ago when it was under 40%. The market has shifted dramatically based on recent events. But that's just one bet. There are thousands. Traders are also betting on whether major tech companies will face antitrust action. Those odds sit around 55%. There's a market for whether Nvidia will hit a $5 trillion market cap before 2027, currently 25% odds. There's even a market for whether an AI system will pass advanced reasoning tests, priced at 68%. Each of these markets is a crowd's real-time forecast of a complex future event. What's remarkable is that these markets have been weirdly accurate compared to traditional predictions. A study of political prediction markets found they outforecast professional polls by significant margins. Markets don't get distracted by opinion or narrative. They only care about what happens next. They are ruthlessly efficient. The Trump market this week provides a perfect example. While cable news was debating what the news meant, traders were already repricing thousands of correlated markets: tech stocks, dollar futures, political futures, policy futures. Within hours, the full implications rippled through the entire market network. It's like watching reality repricing itself in real time. Here's where prediction markets diverge from traditional forecasting. Traditional polls ask a sample of people, "What do you think?" Prediction markets ask, "What do you think?" enough to stake real money on. That's a massive difference. In a poll, you can say whatever you want. Polling companies try to weight responses, but there's no penalty for being wrong. In a prediction market, being wrong costs you cash. Political pollsters have a track record of substantial misses, think 2016, or polling on various ballot measures that completely whiffed. But prediction markets have historically been more accurate because they incentivize truth-telling through financial incentives. Another key difference: prediction markets update in real time. A traditional poll takes weeks to conduct and publish. By the time results are public, conditions have shifted. Prediction market prices change by the second as new information arrives. You can literally watch investor beliefs evolving as you watch the ticker. The third difference is transparency. In a prediction market, every order is visible. You can see the order book, how many people want YES at each price, how many want no. This radical transparency makes manipulation much harder compared to traditional polls, which are opaque black boxes. You have to trust the polling company's methods. With prediction markets, you see the evidence yourself. Wall Street has started paying serious attention. Major hedge funds and asset managers are now treating prediction market prices as part of their information diet. Here's where this gets interesting for anyone invested in technology. When billions of dollars are repricing outcomes in real time, capital starts flowing in new directions. If traders believe AI regulation is unlikely, venture capital follows. If they think semiconductor shortages are coming, money flows to chip manufacturers. If prediction markets are pricing Trump's return as increasingly likely, tech policy futures change, and investors reposition accordingly. This happens before it's obvious to the average person. In other words, prediction markets are a leading indicator of where institutional capital is actually moving. For AI specifically, this matters enormously. Prediction markets are increasingly used to forecast AI development milestones. Will a particular AI capability be achieved by a particular date? These aren't just gambling games. They are legitimate forecasts that companies, governments, and investors use for planning. The broader implication is that prediction markets are becoming actual market infrastructure. They're not just side shows anymore. They are where real capital flows to express views about uncertain futures. When $2 billion moves in 48 hours, that's not hobby money. That's institutional capital treating these markets as legitimate price discovery mechanisms. This represents a fundamental change in how markets process information and forward-looking belief. The next phase is integration with AI. Forecasting models will get smarter, prices will update faster, and the gap between what the market believes and what's actually happening will shrink. If you're watching this and thinking about your own strategy, here's the framework. First, prediction markets are data sources, not oracle machines. They're the best real-time collective forecast available, but they are not perfect. The crowd can be wrong. Use them as one signal among many. Second, watch for extreme prices. When something is 95% or 5%, it's either consensus or contrarian opportunity. Third, look at volume. When billions flow into a specific bet within 48 hours, institutional capital believes something important is shifting. Fourth, follow correlation chains. When one market moves, it drags others. If policy futures change, tech stocks move. If semiconductor odds change, AI company valuations move. Understanding these connections gets you ahead of broader repricing. Fifth, remember that prediction markets attract sophisticated players, quants, academics, traders, and AI models. The aggregate prices reflect thousands of minds trying to predict specific outcomes. Finally, these markets are still small compared to traditional finance. They move fast and sometimes wild, but they represent genuine frontier thinking about how markets will work in the future. So here's what to take away. Prediction markets are evolving into actual market infrastructure in 2026. They're no longer niche experiments. They are where institutional capital is pricing complex futures. The $2 billion surge in Trump-related betting this week isn't a sideshow. It's evidence that the infrastructure for real-time collective forecasting has matured. As an investor, as someone interested in technology, or as someone just trying to understand where capital and attention are flowing, prediction markets are now a tool in your toolkit. The next phase is integration with AI. Forecasting models will get smarter, prices will update faster, and the gap between what the market believes and what's actually happening will shrink. For viewers watching this channel, the pattern is clear. Artificial intelligence is reshaping how markets work, how we forecast, and how capital flows. The prediction market explosion is just one manifestation of that broader change. If you want to stay ahead of market changes, you need to understand these systems. Follow for daily AI news. We break down how technology is reshaping finance, forecasting, and markets every single day.